Hello and welcome to another episode of FinTech Focus TV with me, Toby. Today, I'm absolutely delighted to be transported out to Dubai, and I'm speaking to George Davis from Lorum. George, how are you?
I'm good, thank you.
Listen, lovely to have you on the show. You were introduced to me as a mastermind, which I'm very excited about talking to. So I love speaking to people who are innovative, who are thinking differently, who are doing great things with great businesses. About 3 years in now, you've done some great things with the business. It seems to be moving in an incredible route. We're going to be talking about the growth. We're going to be talking about lots of other bits and pieces as well. The clearing space is obviously going through a massive change at the moment, and probably still needs a little bit of a rethink. That's where you're very much at the heart of. We're going to dive into that a little bit more as well. But George, just as I always start this show up, tell us a little bit about yourself and tell us about the business.
Yeah, great. So Lorum is my third business now. I actually started my first when I was 18, a machine learning business in London. Ultimately ended up exiting that business in 2019 and ended up running payments for a business called TrueLayer in London when they
Yeah.
were mostly a data business, and really got super obsessive with core banking and central bank settlements, ledgers, virtual accounts. But to be honest, equally frustrated that it was really quite difficult for Truelay to build a cross-border or a foreign exchange product in the open banking world, and ended up ultimately leaving to co-found a business called BVNK in the cross-border crypto space, moving money, leveraging stable coins. And that business really grew to be a very, very large business. But through expanding that around the world, really discovered that there is no good clearing infrastructure for emerging markets. There's not one bank you can sit on top of. In Europe, you've got great new clearing services like Clearbank, Banking Circle, but they kind of stop at the border. They all sit on top of a
Mm.
JPM multi-currency product ultimately that's relatively restrictive for the markets it's in. It's really aimed at giving, say, a European customer a dollar account, but ultimately it's not really built for cross-border at scale. And back in the day, maybe you'd have sat on top of a Citibank emerging market FX product. Um, and that network was huge, but really not set up in a world where you expect an instant payment. And because of that, everyone will sell you this myth that Swift is slow and Swift is broken and it doesn't work. And actually,
Mm.
we believe that's fundamentally not true. That
Mm.
actually your money moves really fast when it's at the intermediary layer. It moves really fast when Citi, Standard Chartered, JP Morgan, Barclays are clearing it in the middle. The problem is actually that they're relying on correspondents to do the last mile delivery or the first mile collection in each place. And those correspondents are not built for the use case. They are lending banks who are building a deposit base, who hold on to your money for overnight interest rates, for liquidity. They don't really understand payments, as their correspondent banking is really a function of accruing more deposits. And so they don't really know what to do with your payment. And so payments move slower. They move through a much more kind of strenuous chain. And
Mm.
actually, what if you could be the clearinghouse on either side of that transaction? What if you could be the clearing on the first and the last mile directly over central bank rails, but still leveraging that Swift network that actually works really, really well? And that was really what birthed Lorum for us. That was
Mm.
really what started that out, was actually, what if we could build a global clearinghouse? Why do these things have to be local? Why do you need to sit on top of hundreds of different payment companies with varying qualities, varying standards, using subpar rails like a stable coin to move money into these already high dollar liquidity markets that don't necessarily need a stable coin? And to start that, we really looked very much at the Middle East because it had the most monetary flow and the least infrastructure. As I say, this market is relatively well done in Europe. Like Clearbank, Banking Circle do it really well. And even larger banks like Deutsche Bank, Barclays provide great clearing services in these markets. But actually, there was nothing in the Middle East at all. I always love to tell people our first bank we went live with after we were licensed in the UAE required me to print paperwork, sign it with ink, and courier the paper to a branch to make a payment because there was just no infrastructure there. And so we had to build a lot of that core infrastructure, and that's done us really well. As up to today, we're the only provider of Middle Eastern virtual accounts and local clearing for international financial institutions, and it's really just kind of grown from there very aggressively. So we launched dollar virtual accounts in the US for emerging markets very recently in the last 3 months, and it's just taken over 70% of our business within a
Wow.
few weeks, growing at something silly like 200% month on month on the USD side. Um, we are very late stage on licensing in Asia. We have a Hong Kong and a Singapore license coming through. We're just launching European currencies now, really to build out this global clearinghouse. And when you look at what Citi, what JPM have built, or you look at these large treasury trade services, um, they really build an entire platform for you to run your financial institution on. You can clear payments, open accounts, and kind of manage your cash, put your idle liquidity to work. And that's really what we're building with Lorum over time. So yeah, now
That's a,
stop rambling.
that, I mean, there is so much to unpack there. I'm sort of mind blown as you as you're talking through that. One of the things I really wanted to dive into, of which there's many from what you just said, but you mentioned there about still being sort of one of the only pioneering businesses in the region. And obviously, with the scale and scalability of what you've done so far, and obviously the track record that you can see, from the businesses as you mentioned in Europe. Why is that? Why is it? Have other people not moved into it? Is it early adopter advantage still? What's the story behind that sort of space? That sort
I
of
think
story, should I say?
they're really tough markets, emerging
Mm,
markets, and it's all about timing. And
mm,
I think maybe we were actually a touch early. We were just before the market really kicked off. You've got this, for instance, in the UAE, you've got this vintage of fintech that started during COVID, so before
mm,
us. And a lot of that is non-reliant on good client money and clearing infrastructure. So it's like buy now, pay later, corporate card issuing, so like Brex style products, open banking. These things have moved. But then anything that requires deeper infrastructure just doesn't exist yet in these markets. And if you look at, again, the European evolution, a lot of that sat on top of ClearBank and Banking Circle.
mm,
Like it was really important that those two banks existed for kind of high scale cross border fintech to exist. And so there's been no infrastructure to grow that on. I think it's still being seen how regulation works in this region as well. Like, for instance, in the UAE, there are three regulators. Two of them are no longer the ones you should go for,
mm.
but it's really hard to work that out from the outside,
Yeah, yeah.
because they're still really trying to find their feet on what's correct and how to run this. And I think previously the central banks wanted to regulate only banks, and they would issue non-objections um, to specific companies for specific use cases with specific banks. And now they've realized actually payments should be regulated centrally, and they need to have a more European style payment regulation. And they've written some great regulations on that, but they're only just coming in now. And so that's made it really hard to attack from the outside. And then I think these markets are highly insular. You need to be local and present to build a business there. And so I moved to Dubai to start Lorum ultimately. My co-founder James also later moved with his family, and it was been really important for us that we're on the ground here, interfacing directly with regulators. And um, they do support global business, but they want to support global business being built from the Middle East. And I
Mm,
think a
mm,
lot of large scale cross border payments businesses, so not necessarily clearing businesses, have tried to expand through putting like an MLRO on the ground and a local managing director or something. And that doesn't really work for these markets. You need to be completely embedded. And so we've had to build a full business in the Middle East. And we're now doing the exact same thing for the other licenses that we have in group. We're building a full APAC business, a full EMEA business, a full North America business. Because I think to be good at clearing, you really need to work directly with a central bank. You need to really understand how money moves in those markets, and not just how the payment scheme works, but how currency works there, how politics work in these regions to get things done. And I think that's really, really hard when you're building a cross-border payments business that is more the style of we need to deliver funds at all cost. And that's not Lorem. Lorem's really about high quality payment delivery. It's all about starting to create thousands of named virtual accounts in each market in seconds over an API, and having a high amount of reliability that the payment is going to arrive in the correct name at the right time over an instant payment rail always. If you're building a remittance style business, you kind of just need to get money over the wall at all cost.
mm.
If you're processing $100 remittance, you need it to just arrive. You don't really care what name it arrives in and how it arrives there. And so these businesses do really well expanding through just 1 or 2 people in each place, getting a license and running, or maybe sitting on top of another payment company. But that doesn't work for our model, and it doesn't really work for the Middle East. And so we've had to be very deliberate in how we run our Middle Eastern business and how really we scale Lorum generally. And I think actually we've taken a lot of those learnings and are using them in Western markets that maybe aren't so used to operating in this style.
So, George, coming back to your thoughts about that, and you mentioned some of the barriers to entry of that reason as as to why it's there, and but arriving too early. I would much rather people turned up slightly early than slightly late on these sort of things, but doing that and moving your life and your co-founder's life over there and all that sort of thing. What was it that was so compelling to you to say, look, this is a difficult challenge which we're taking on. It's a complete upheaval in terms of everything. I need to be out there. You just mentioned loads of things there about some learning, government politics, etc., all of those sort of things. You need to. What was the sort of golden thread that allowed you to start unpicking that to say, this is what we're going to do. This is why it's needed. This is why it's going to enjoy the success that you've already been able to achieve in a relatively short space of time already.
I think James and I knew when we were starting Lorum, we wanted to build a very global business, and that what we were good at is virtual accounts, central bank settlements, etc. And that kind of transports wherever you look. And so then for us, it was about where can we add the most value as fast as possible? Where can we bring as much learnings as fast as we can? And with the Middle East, it has nothing at all really in the market available. And so we knew there was kind of no real competition there. There was no real standard, and we could bring a very European product to that market and it would work well. And then we also saw how much interest there was in the region. So for instance, with BVNK, it was a high interest region for a while for us. So a lot of customers looking at Middle Eastern currencies. And it just was really, really difficult to enable. And so we knew there was demand there. And I think this region has some of the most sovereign wealth in the world, some of the most prosperity, really, of any country, any continent in the world. And so,
Yeah, absolutely.
especially the Gulf region. And so there's always a lot of money moving in and out. And then ultimately, the Middle East is responsible for a few of the top 5 remittance corridors in the world, out to Asia, etc., India. And so we also knew a lot of money was moving through these hubs here. And we knew in particular UAE and Saudi was very important. And then obviously the lifestyle is very easy to adapt to in the Middle East as well. So it's not the hardest place to imagine needing to move to these days.
Yeah, I imagine it's got its plus points to you as well. So you mentioned the sort of background of the pair of you and seeing this sort of issue. You've talked about the backgrounds of where you've come from in the past, the sort of companies which you're doing it. When you talk about, and also, where I think you said third time founder in terms of what you were looking at, starting this up again now and going for this and the lessons you've picked up from your former lives. What are some of the things that that have allowed you to enjoy the success that you found so far? What are some of the things there that you think have allowed the business to prosper as it has?
Firstly, in kind of designing our product, we have been the users of this product everywhere. Like we've built the global cross-border businesses on top of the many payment players, and we've used a really high quality clearing services like Clearbank in Europe. And so we have a really good understanding of what we're building. And then I think our ability to kind of sprint at these problems in difficult markets like the Middle East, like Asia, has been really powerful for us, that we can get things done really quickly. I think often the pain inside these large banks is that they're too big to innovate fast. And actually, we can bring a ton of learnings from other markets, from other banks, from other clearinghouses, and apply them very, very quickly in these markets. And that's something that has been difficult for the large banks, to the extent that we are now actually selling to a lot of these large banks. So we have a lot of these large scale clearing banks are becoming our customers at the moment to buy these services, because they know that it's actually worth their time more to work with Lorum than it is to go and branch their bank and build all of that clearing infrastructure directly themselves.
Isn't that fascinating? And you, as you talk further as well, you're obviously there now, and you mentioned the various different hubs and the various different geographies, and this being a very global sort of play for you. Talk to me about how you sort of learn that next sort of phase at pace, whilst still maintaining everything that you've managed to achieve in one geography, and how you sort of globalize that, because that's an interesting challenge, isn't it?
So I think when we first started the business, we thought that we would go deeper on the Middle East up front, that we would
Mm,
spend longer just on the Middle East.
mm,
And that actually this was a market that needed all of that focus. We then found that customers really actually want to do all of their clearing in one place, which is a great finding for us, but super surprising because
mm.
we've built
You didn't expect that?
large. No, we built. I mean, I can understand it, but we've
Yeah,
built large scale fintech where part of your job is just to work with tens, 20 different payment companies to power
yeah,
your product or banks, etc. And actually, I think customers love the quality of the product. They love that they can always create thousands of accounts on a Reliance KYC model in the name of their end customer, and it always works. And they value that so much that we started getting demand for euros, pounds, dollars, and we started to push into the dollar market and really discovered that outside of the US, there's almost no way to create a US dollar virtual account in the name of your end customer properly, especially that works well and is close to the rail. And so we launched dollars, and this really propelled us globally because suddenly I think 10% of the dollars we process are in relation to the Middle East. The other 90% are to Africa, Asia, China, India, across emerging markets, and even sometimes in and around the US and Europe. And we just discovered that actually this problem just goes much deeper than just a single market or even just emerging markets. So that actually people need good clearing infrastructure in 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 every market around the world, and it's really a neglected part of the payment stack that
mm,
everyone builds above it. Everyone builds the layer at the top, the cross-border payments business, the Wise, the Neum, the Tunes, and they all leave this clearing bank slash like treasury trade transaction banking layer to a small group of tier one correspondents who only work with other tier ones generally and
mm,
then provide quite restricted service. And so you end up seeing that these higher level payment businesses are built on top of other banks who are built on top of other banks who are built on top of this tier one service. And we found that actually no one is really innovating properly other than Clearbank, etc. Uh, on that bottom layer. And even then, Clearbank is just doing it for Europe. And
mm.
it's almost a clearing bank built in an era where you really focus on local payments. And now every fintech is focused on global. Every bank is expected to somehow be global immediately. And so we were
Yeah.
just pushed really, really hard by our customers to get there. And as I think keeping the quality high, it's been really important to us that we scale full businesses in each place that we launch that. So we have hired general managers around the world. We've gone from in the last 4 months, we've gone from 12 people to 30, and I think
Wow.
by January we'll be near 50, and
Yeah.
growing. And so we have to build quite a heavily local business in each
And
place to keep
how's
this
that been for
quality up.
you, George? Because that's a sort of very different sort of gig, isn't it? From running a sort of a dozen people and sort of being very hands on, to then sort of seeing a business scale at that sort of phase, to then suddenly fast forwarding and before before long you've got 100 people and your job's changing from being nuts and bolts and doing all that sort of stuff to having to get the right people around. And you mentioned their general managers and getting the right people into the right sort of zones, etc., and all that sort of thing. But tell me how you're dealing with that, how you're coping with it all.
I think it's an exciting change. I think for a long time we built this business very lean. Right? We raised a $2 million pre-seed when we
Yeah.
started the business, and then we found that actually there's a lot of very early stage capital in the Middle East,
Hmm.
but large scale American money is still scared by the region. They haven't made their investments properly. They're starting to. And we just thought this is going to be really hard without huge traction to raise lots of money. So we can't build the American way. We couldn't build by immediately growing to 50 people and
Mm,
going from there. We need to build very lean. And I think probably our mistake was we stayed too lean too long. And
mm,
now we're like a third of the size that we should be for managing the size of book that we're running. And like the business is growing at for the last 3 months, 80% month on month, and before the 3 months before, 60% month on month across the board. And that's just chaos to deal with, really. And so it's actually almost a welcome relief to have more people, but I'm having to become very good at flying in and out of problems, rather than
yeah.
kind of being the one solving them all. Um, but it's exciting. We can get more done and manage this business better because it's just blown up in the last 6 months at a rate we would never really have imagined.
Talk to me about what sort of fueled that growth. So 60% in 3 months, everyone's delighted with. 80%, you're sort of the smoke's coming out of your ears and all that sort of stuff. I imagine that's not going to slow down by the sounds of everything you're talking about. What's fueled that sort of growth?
I think the biggest catalyst for us was launching a dollar product. That was huge. We didn't really realize
You
the size
mentioned
of
it,
the
yeah.
dollar opportunity until we did that. Um, and I think that's got so many use cases. When you can move dollars in 10, 20 minutes, an hour into quite difficult markets in the name of the customer, in a virtual account that you can spin up in a few seconds, I think that's really powerful. And I always say, like, we can't see the bottom of the pool. We just can't stop seeing the interest. Our sales team kind of don't really have capacity to do a lot of outbound because we get so much inbound. And so we're needing to scale sales and all the functions around that quite a lot. Um,
Mm,
and I think when the more you add, the more currencies you add, the more network effect that you add, the more you get this compounding effect in this sort of business. Um, and I guess our priorities shift from just bringing on volume to then kind of retention and building a platform that these banks, these payment companies can build their business on in these regions. And the more we look to that, the more it grows. And so I think really it's just having extremely strong product market fit on this in markets that
mm,
either you can't do it in today or just too difficult to tackle generally. Um, and that's really how we choose where to focus as well. Is
mm,
where can we have an outsized effect with really strong clearing infrastructure? Where's there a lot of money moving, but it's difficult and you need right down to the metal infrastructure to do it right.
mm,
Um, and we prioritize very much never having caveats in our product. We won't launch markets where we can't do the exact same thing. A lot of these payment companies will launch products where in one market it's in your name, in another market it's in theirs, in another market it's another customer, and oh, you can use Reliance KYC here, but here you need to directly onboard the customer, etc., etc. And we won't do that. So, for instance, we won't work in markets where there's not strong dollar liquidity, where you can
mm,
get in but you can't get out, for instance,
mm.
because our customers love that they can do one integration, effectively 3 or 4 endpoints to hit, and they can create accounts, send payments, receive payments, buy into other currencies. And it's really important that customers can, the same way when you use a correspondent bank, you can just throw a Swift message to them and it always
Awesome.
works. There's always a
Mm,
way to route the payment. And that's really important to us. And I think that's also helped with the quality of growth and the diversity of customer. Um, and I think really importantly to us was making sure we weren't too reliant on one use case, one customer. And I think our total concentration is one of our customers is something like 7% of
yeah.
our income. So it's not super concentrated at this point now. And we're spread across everything from employers of records to gig economy platforms to banks, payment companies, etc. And they're all growing independently at their own rate.
So we know that sort of banks and payment companies aren't necessarily the easiest clients to onboard in the world for various different reasons. Uh, but it sounds like that's not been an issue for you guys. And I often talk about procurement being the stranglehold of a number of different startups. In relative terms, there's a fair amount of money that you raised at that pre-seed stage, but there's runways that are involved in all that sort of thing. So it's obviously been something that's sort of been picked up and taken very quickly and adopted very quickly. Despite the fact you've been very humble all the way through this at various different stages, George, but when you're talking about maybe arriving too early and acting a little bit late, I get the feeling that there's this the serendipity story that sort of comes through from a lot of what you're talking about has been designed through, being in the, you mentioned it itself, product market fit, getting the right choices and making the right decisions about where you're heading. So tell me about the sort of process and the adoption process and how people have been sort of getting on board, how that's worked for you, and why it's been easier than a lot of people who struggle to sort of get that early traction in their business.
I think one of the best things we did was our fourth hire was a chief compliance officer, Kate. And
Yeah.
Kate spent 10 years in the FCA in London in enforcement, fining large banks. So very much understands how to look at what's going on and what shouldn't be happening, and how to talk to a regulator, etc. She then ran a team at Facebook in their e-money institution in Ireland, and then was at Truelove, etc. She's extremely strong. I mean, we were licensed in the UAE in the DIC in 7 weeks in Dubai because of her. And I
What a
think,
great hire for a fourth hire, isn't it? That
yeah,
CV.
absolutely. And I think rolling her out to customers has always been a win. Like even at conferences and things, it's like it really, especially the larger customer, really gives them a lot of confidence in the stability
Yeah.
of kind of our regulatory setup, our understanding of the payment flow. That's been very, very important. We're always extremely transparent with our customers as well. So we don't really hide anything. We'll be very upfront about what we can and can't do and how we can or can't do it. And that's really helped with these larger relationships because I think a lot of payment companies, who I won't name,
Mm.
came to the region and promised Middle Eastern clearing, um, and they promised that to win international business. So they promised it to win, say, an Asian business line, because that's where they were really strong at moving money and then couldn't deliver. And most of
Mm.
these companies end up sitting on like a Barclays Swift product, a Barclays Dirham Swift. That's very common, a British IBAN clearing dirhams and reals across the region. And I think it became really important to our customers that we were very honest about what we could do. And that's been a kind of tenet of Lorum all the way through. And remember, our
Mm.
first ever customer was dLocal. We
Mm.
really designed a lot of product around dLocal, and that was
Mm.
a very big deal for them. Is that they always knew what was going on at any moment in time, and we've kind of brought that through to everything. And then I think increased balance sheet has helped with large customers. I mean, we've now raised a total of about $20 million since starting the business, and um, we don't burn very much money at all.
Mm.
We're building a very scalable business actually in that on that front, very capital efficient. But having a larger balance sheet has really helped. Like I remember it took us over a year to close a very large Chinese financial institution for remittance back to China. And just the crux of the problem of that was just we were 12 people with a small
Mm.
balance sheet. And so I think often these banks, especially, or large networks, really want to see a much bigger and more stable business. And we have to come across a lot more institutional and safe and stable. And I think that kind of echoes through the product as well. It's like you're not necessarily always looking for an instant payment. You're actually looking for final payment that you can trust. And that's been a big part for us, trust in everything. And then we also have an excellent chief revenue officer, Yasmin, who joined us in December last year. And
Mm.
the business has just gone crazy since we actually started doing sales properly.
Isn't it funny about how simple it all sounds? But you mentioned there about the sort of quality of people, which has always been sort of very close to my heart for obvious reasons. But alongside that, you talk about the importance of the first customer, and I think that's often underestimated, isn't it? Once you get people in there who are able to work and develop with you and go through that, I've seen so many companies that sort of are turbocharged by the sort of investment or the ability to have that first customer and how important that first customer comes to the rest of the development of the product.
Absolutely.
And those people that you've brought on board, is everyone Dubai based? Are you global? How are you looking at that side of things? Is it local as you
We
sort of
started off
expand out?
very, very Dubai based.
Mm.
And so I would say probably 40%, 50% of the team now is in Dubai. Yeah, a little over 50% now. But now
Mm.
as we grow, we're doing a lot of hiring in New York and the US,
Mm.
for some things we're doing there. And we are doing a lot of hiring in Singapore for our
Mm.
licensing there and building out the APAC side of the business. So it will become super global. I think when we're looking um, at being 50 people by January, I think it will be probably 30, 40% in Dubai and the rest split across Europe, US and Asia. And I think that's really important to the way we're scaling the business. It can't all just be in Dubai, for us
Yeah.
to build this business out.
And how are you finding that? It's because again, it's talking about that sort of different challenges of starting up and being lean and having all that sort of stuff, and then going through rapid acceleration. I'm always fascinated about how the onboarding remains, sacrosanct, about how the experience remains sacrosanct, about how the communication remains sacrosanct, about how you sort of communicate with everyone across the
Absolutely.
business and still get that sort of thing. How you dealing with the cultural shift as well?
So we are extremely in person. I'm a very in person person. I'm not a
Yeah.
huge fan of remote work. And so where we onboard people is really very driven by where we have hubs. We would
Yeah.
rather people were in, obviously, we obviously know we can't all be in one space forever. Um,
Yeah.
but we can replicate that one space in each of those markets. Um,
Absolutely.
so I think that's very important. We come together once a quarter as an entire team, and we'll do that for as long as that makes sense for us.
Yeah.
as well.
I've been
And
there at
so,
various stages as well. There's a stage where it reaches a tipping point, right?
yeah, absolutely. And we're not there yet. So it's great to be able to communicate in person. And then I think generally, especially for expanding in Dubai, um, recent UK government policy has made it very easy to import talent to the UAE.
Yeah,
There's many
absolutely.
people in the UK that want to move. And so we've managed to move quite a lot of really
We'll
strong
see what
talent
happens with
there.
Rachel Reed. This will be going out after the November and the autumn statement. So you might have a fair few more. I might be next to you.
Yeah, maybe, maybe. Um, and then and then I think there's existing really strong talent pools in New York and in Singapore that are really helpful for us. So and I think
Absolutely.
people are excited by this. I think at the rate that we're growing,
Yeah.
it's relatively rare in fintech right now. And so it's a really exciting opportunity. And I think people really want to do something a bit different. And we've seen all these cross-border businesses, and then we've seen them all replace Rails with stable coins, and it's being done over and over. And it's being done really well at scale, like with BVNK, Bridge, etc. But I think people are getting a little hungry for something that actually innovates on the infrastructure space below that. And so
Mm.
a lot of talent is really excited for the stage of the journey that we're at.
I think that's such an important thing to say. I'm glad you mentioned it. We do a workplace awards every single year, and look at the sort of fintech's best workplaces and what makes them that, with various different categories. And so I interview the founders of those businesses and the teams of those businesses and talk about why they're a great place to work. And it's a fairly simple thing. We pass it over to judges who then review it. Now, when I'm having those conversations every year, I see a slight difference in the conversation about what they're doing and how they're standing out with their employee value proposition. And I think this year we do a candidate survey the month before, and then we have a sort of workplace awards there afterwards. And you fuse the two together as to what people are looking for. And I think that the big thing this year is about how people are understanding the purpose and the value of what you're doing, and the complexity of the problem that you're trying to solve is the driving force for what people, the best talent are looking for at the moment. They want to work with great people. They want to look left and right and see inspiring people who are doing something, and they want to see something that's changing a marketplace and innovating in that sort of space. And I think when, everything that we've spoken about for the last half hour or so, George, has been absolutely around that sort of subject, right?
Yeah, absolutely. It makes total sense. And that's the theme. I think people really care about that. And then beyond that, I think James and I have tried to build a business with a culture that really reflects who we both are. And anyone watching this who's worked with me before knows I'm very not diplomatic. I'm very forward and upfront and casual in a lot of ways, but I don't really bite my tongue very well. And we tried to build a culture around that where it's quite open. And I think that's really the only way
Radical
we can.
candor, I think they call it at Netflix, don't they?
Yeah, absolutely. But no brilliant arseholes as well, I think, is the other premise they have, which is important too. But yeah, we've tried to build the business that way, and it allows us to move super fast when you can act that way. And I think that's the most important thing from it. And people like moving fast. I think fundamentally people actually care about the business doing well. And that's really what
Yeah.
drives them to love a culture of a business. Because if everything is running super fast and moving really fast, you feel like you're having impact and you have purpose and you're doing something meaningful. And I think that's helping us win talent now as well.
Absolutely, George. Look, this conversation has disappeared in a flash. I've just looked at the clock on where we're at, and it feels like we've been speaking for 10 minutes, and it's just disappeared like that. But so I want to finish up by talking about the business in the future. This will be going out end of this year, start 2026. Lots of excitement around that. It feels like, by the time we speak again in a year's time, and I'd love to have you back on the show to be talking about where it is. We will be talking about a monster of a business by that sort of stage. And growth seems to be on the agenda. Tell me what's exciting about the year ahead, what people can expect to see, who should be reaching out to you, and what they can expect to have from that.
I think, yeah, next year is all about scaling for us. Or suppose this year, if we're releasing this in January, but it's all about scaling for us, and that means more currencies and more approach. We have a lot of licensing coming through right now, and we have a couple banking licenses in the mix that we're in process for now. And so I think it's really solidifying that part of the business, and I think building out the wider platform that is what we do. Bringing in cash management, transaction banking, and into the mix to really build this City or JPM like treasury and transaction business line. And that's really exciting. I think that the US and Asia will be a very key part of the story for next year, and as we scale through and kind of come through on all this interest that we have at the moment.
Yeah, absolutely. Well, look, it sounds like a hell of a journey. We were talking beforehand about the privilege that I've had on this show over the last few years, and the sort of 600 episodes that we've recorded over that sort of time is I find it massively inspiring. I find it invigorating. You know, we're filming this towards the end of a day, and I'm finishing the day absolutely buzzed on the concept of what we want to do. I love the story, love what you're achieving. It sounds like a a great business. So I'd love to keep you on the show at various different stages, see where everything's heading. And George, I wish you nothing but massive success. If people want to find out a little bit more about Lorum and get in touch with you, what's the best way for them to find out more?
Yeah, I think through our website, reach out, and on LinkedIn as well, is probably the best way to reach us.
Good man. Listen, very best of luck with everything. Congratulations on the story so far. I have a feeling that even better is to come. George, it's been a pleasure having you on FinTech Focus TV. Thanks so much.
Great, thank you for having me.
And thank you all for watching. We will see you soon on the next episode. Thanks for watching.